and we've got some check marks, and I have to do this extra thing over here for Instagram. Go live. There we go. And I can see we've got some people already tuning in. So we've got Gary Weiss here today. I'm gonna play the intro, and then we're gonna get back into this conversation, and we're gonna learn all about who Crazy Eddy was, and about how his story might have some impact on small business deals that you might be working on. So stay tuned. I'm David C. Barnett, and you're tuned in to Small Business and Deal Making, the podcast, YouTube channel, and blog where I talk about buying, selling, financing, and managing small and medium-sized businesses while controlling risk. So if you're looking to take control of your future through buying a business one day, or if you already own a business and you're looking to grow or exit, you've come to the right place. I talk about interesting things, I talk to interesting people, and I answer your questions every week right here. So be sure to hit like and be sure to hit subscribe, and let's get to it. Are you thinking of growing your business or beginning a journey into entrepreneurship? Take a shortcut to success by buying an existing and profitable business the right way. Visit businessbuyeradvantage.com and learn more about my online training, group coaching, and consulting services designed to help you win. All right, everyone, welcome. And today, I'm really excited to have Gary Weiss with us today. And Gary is an author of several books. The one we're going to be talking about today, here I'll put the image up on the screen here, is Retail Gangster: The Insane Real Life Story of Crazy Eddy. And I've got this in my Amazon bookstore. So if you go to dcbbooklist.com, it'll take you right there. And it's in the biography section. And Gary, so to begin with, you wrote the book. Can you tell us a little bit about your background and sort of how you came to be a writer of a book like this?
Well, first, I want to thank you for having me on. I really appreciate it very much. Good pleasure. I was a newspaper reporter for many years, and then I started writing books about 25 years ago. My first book was about the mafia and its infiltration of brokerage firms. And then I did a couple of others in that vein. But this Crazy Eddy situation really had intrigued me for many years because, it was such a major presence in the Northeast United States, this immense electronics store that was a legitimate store, and yet at the same time, under the surface, it was also a major fraud. And to me, that's very interesting, this dichotomy, you see, between the legitimate and the fraudulent. It's very interesting and also very, very unusual, not something that you find necessarily every day. But in the case of Crazy Eddy, it was really sort of in your face, both the legitimate aspect, which was all over the airwaves, these great commercials that they had, and the fraud, which was astounding.
Well, let's talk about the character, right? Because this was a business person who had a retail stereo shop. At one point, he had several businesses through his career that I learned about through the book. And he had this stereo shop, and the Crazy Eddy was kind of a marketing persona, wasn't it? That was for radio and television. Can you describe a little bit about how he portrayed himself in the marketing for the business? Because I think this has been copied by people all over, and people probably have a frame of reference for this in wherever they happen to be.
Yeah. Well, actually, Eddy himself copied it, probably. It's the old. It's sort of an old, almost a cliche in retailing, that you're so crazy, the prices are just ridiculous, and you're not going to make money off of it. That's an old cliche. It's been around forever. There was a California retailer who did it, and it was something that popped up in situation comedies, for instance. But Eddy's shtick, as they called it, was to say that he was so crazy his prices were insane, and he hired a guy named Jerry Carroll as his TV spokesman, who had all these commercials that were pressing the same point. My prices are insane. Come down to Crazy Eddy. And he did. These commercials were a cultural phenomenon. The store itself is a cultural phenomenon. This was back in the 70s and 80s. And people had sort of a very fresh attitude toward hucksterism back then. People are jaded now, I think. But back then it was a big deal. His ads, his print ads were really very innovative and interesting, and his commercials were all over the airwaves. Millions of people saw them all the time.
Yeah. And so when I was growing up, I mean, I was born in 1975, and when I was growing up in the 80s around here in the Maritimes on the east coast of Canada, we had a similar kind of retail outfit called Wacky Wheatley's. And when I was reading the book, I was like, oh my God, it just sounds just like the sort of advertising pitch that Wacky Wheatley's was doing all the time. And it was the same kind of stuff. It was TVs and stereos and that sort of thing. And so, in the book, Eddie starts off and he's got this small business, and he's operating his small business in a way that I've seen many times in the world of small business. People who are in this world can run their business entirely by the book, as it were. And sometimes people sort of stray into these gray areas or just completely onto the wrong side. And one of the examples that I will often use is someone might take a personal expense like their children's cell phone. They might put that into the business, and they might start paying it through the business. And so, the effect of that, of course, is that it reduces the profitability, reduces their tax bill. And when people are buying a business, we often deal with this through what's called an add back. But Eddie took it one step further. Not only was he not declaring some of his revenue, his sales, but he was doing something else too. You want to get into one of his first big frauds?
Oh, there were just so many that it's just hard to pick which he did. Which was which was more important than the other. One of the things that he did, which I think is less common than it used to be, this was a cash business in the beginning. Nowadays, you find cash businesses, but they're less and less common. People generally pay in plastic. But it was a cash business for the most part in the early days. And what he'd do was he charged people sales tax. Okay, so you charge somebody for $200 stereo, you tack on $16, say, for sales tax, New York City and state sales tax. And what he would do is he'd collect the sales tax and he'd not pass it on to the state of New York and the city of New York. This gave him a sort of an edge, because he could then charge less, sometimes less than cost, because he was charging for sales tax, collecting the sales tax, and not passing it on. So this gave him a hidden boost to his profit margin. It was quite a risk. It was a tax fraud.
It's literally stealing the state's money. I mean, when you collect sales tax for a government, you're the trustee of that money. You've got these obligations, right? And he was stealing that cash.
He was stealing it, and he didn't pass it on. But he was never caught for it. Never. Even after he was nabbed for other things, federal crime, the state never went after him. He got away with it. He got away with it. Yeah.
Well, and so the other thing that was interesting to me is at that time, the manufacturers, it seems, were interested in making sure that no one was discounting their products.
Right.
And so at one point, Eddie actually made a deal with some other folks that you talk about in the book that actually put him into contact with the criminal element, didn't he?
Yeah. Yeah. Well, since he was stealing the sales tax, he could afford to advertise these ridiculous prices. And he was, people would charge reasonably good prices. And the other thing that happened was that, of course, everybody wanted to sell all the major brands, Sony and, JVC, all the big brands, but they wouldn't sell to him originally. They wouldn't sell to him. They were permitted to set their own prices. They call this vertical price fixing. It was legal in those days. It no longer is. It was legal in those days by state law. It's called fair pricing. It used to be known as. It's a very complex legal thing, which I'm not going to get into. So to get around it, he went to sort of like people who were shadier than him, who were willing to sell him merchandise at a little bit above their cost, and they were willing to sell it to him. And one of the people who were willing to sell it to him was this outfit in the Northeast Bronx, which was primarily a numbers bank. It was a mafia operation. It was primarily a numbers bank, and they had this electronics store, which was an authorized dealer. You know, they sold electronic, and these guys, they said, sure, we'll sell it to you. We'll do it. You know. I guess things were maybe a little bit slow in the Northeast Bronx. They were on White Plains Road in the Northeast Bronx. We'll sell you a high volume of this Sony merchandise, and they did. You know, they got around. So that's how he was able to get this Sony merchandise, and they didn't want to sell to him, but he was able to get it.
Yeah. Okay. So we've got a whole bunch of people here, Gary, that are piling in. We've got Mark from Arizona says good morning. We've got Victor in Nottingham over in the UK says hello, and that he's liked the video. Please hit the like button out there. Elephany says good morning, brothers. Hey, good to see you too. And how is this going to link to a discussion on buying businesses? Don't worry, we're going to get there. So Eddie started off in this small business. And the whole point of some of these things that he was doing was to boost his bottom line, right? And so, he had all of these earnings, a lot of them in cash, and he started to squirrel away this money. But where the story really takes a huge change, I think, is when he became wise to the idea that if he could somehow make his business public, he could then start to manipulate the stock price. And so, we talk on this channel all the time about buying and selling businesses. And one of the biggest differences between a small business that has an owner operator versus a publicly traded company is that when these things are valued in the world of public businesses, the rate of growth is often one of the key elements in determining the price because people are looking forward. And so, how did Eddie, who was this stereo shop guy, even have his eyes open to the idea that he could take this to an incredibly different level?
Well, to begin with, like as I mentioned, this was largely a cash business. And what he used to do for many years, he would skim cash. He'd skim cash, I should say profits. He would skim profits. And they would actually take the cash, literally stuff it in mattresses and in ceilings. Above panels, they would do that, and a lot of it eventually they shipped to Israel. These were Jewish immigrants from Syria, and they were very interested in Israel. And they traveled to Israel, and when they came to, sometimes they would tape cash to their bodies and go to Bank Leumi in Tel Aviv and deposit the cash in that bank and in other banks. Okay, so they're skimming cash. They're skimming profits. Okay, now they had this young guy working there, the young cousin of Eddie, named Sam Antar. Sam came up with a brilliant idea. He was college educated accountant. This was very unusual in the family. It was not a particularly well-educated family, intelligent people, not well-educated. He had the idea to say, look, we're skimming all these profits. We're reducing our profits. Now, true, we have to pay less in taxes. And of course, we don't have to pay taxes ourselves on what we're skimming and what we're keeping ourselves. But you know what? If we're going to go public down the road, we can manipulate the skim less and less and less of the profits to make it seem as if our profits are increasing. And they adopted this wonderful idea. It was a great idea. They adopted this $1 million idea, shall we say, and this showed profit. So therefore, when they went public in 1984, right at the peak of what was then an IPO boom in the early 80s. They were able to show immense profit growth, which they largely fabricated because they were manipulating the skim.
So they took the cash out to save taxes, and then in preparation for the IPO, they started to sneak the cash back in, recording it as sales.
Well, no, that they did later. You see, that they did later.
Okay.
In this initial phase, before the IPO, they just took less and less out of the company in cash. They skimmed less and less out of the company. Now, eventually, they decided, well, let's put some money back in the company. Let's unskim some of the money. That was later, you see. That was later when they
Okay.
got in trouble. But right now, in the halcyon, the salad days before the IPO, they just skimmed less. And gosh, that worked. Oh, it worked.
So the first point that I want to relate to everyone out there is that this is something that I've seen many times, because there are people all through the world of small business who are trying to quote unquote manage their tax burden, and they'll do different strategies like putting personal expenses into their business. Some of them will actually pocket cash in an effort to reduce their net income to pay less tax. And then if they tune into a channel like mine and I explain what kind of problems this will create for someone trying to buy their small business and that they should stop doing that kind of thing. If they listen to that advice and they stop doing that kind of thing, it's going to look like they've had a jump in sales and earnings on their business just because they're no longer participating in this kind of activity. And so, some of the advice that I give to people is that many times business owners, if they are not declaring all of the revenue of the business, they will still declare most of the costs. And so if you look at the cost of goods sold, or the sort of relationship between revenue and expenses, you can often see if that relationship changes at a certain point. It can be an indicator that they've done this kind of manipulation. And so, in the world of small business, if you see this sudden increase in profits, this is something you might be tuned into.
Good idea. I should have interviewed for the book. That's actually excellent.
Well, and we mentioned a little bit about this before before we started recording, but can you tell us a little bit about this type of work that you did and the interviews and the reading you did to create this book?
Well, we're dealing with something, of course, that happened in the 1970s and 1980s. That's a long time ago, I mean, even finding out what's happening today is difficult, fortunately, because eventually the walls collapsed on Eddie Anton, the mastermind. And because he had that young fellow I told you about, his cousin, who gave him up with a great idea, he became a cooperating witness, and he helped me a great deal in the book. And I interviewed him at enormous length. But in addition, because of the litigation, because of the criminal case that was held against Eddie, I had a tremendous amount of documentation. I had pre-trial depositions in the divorce case. When Eddie got divorced, he was a philanderer, and there were financial aspects in his divorce. So there was a tremendous amount of litigation, private litigation, class action litigation. So there was just a lot of paper, a lot of wonderful pre-trial interrogatories, which I was able to access and read and enjoy and quote, and it's all documented. It's just a wonderful thing. All that paper can be just wonderful.
Awesome. Okay, so they achieved their IPO, so they were able to put their stock on the stock market,
Right.
and then, as we mentioned earlier, they instead of just running the business and trying to manipulate things in the business for profit, they were now trying to do things to manipulate the stock price, because they realized that they could make a lot of money through the stock price manipulation. So we already kind of mentioned that growth is one of the keys for publicly traded companies to really drive the stock price. And I guess I already kind of gave it away. One of the things that they started to do was this the first major fraud after post IPO was them feeding some of their cash back in.
Well, that actually was just a little bit later. The initial thing that they did. You see, because of this massive profit increase before the IPO, Wall Street expected that they would continue to have massive profit increases after the IPO. But unfortunately, although they were doing quite well, they weren't doing quite well enough. Their profits were not legitimate. Profits were not really increasing at a sufficient level, to continue the pattern of before the IPO. So what they did was they started to manipulate the inventories in their warehouses in order to boost profits. Because when the contents of your warehouses are used to determine the cost of goods sold, and that it goes direct to your bottom line. So they would inflate the contents of their warehouses and deceive the auditors who were physically located in the warehouses and were completely clueless. And they did this through various means. It was really quite comical that they did. That was the first thing that they did.
So the idea of manipulating inventory to affect your profits. I mean, again, this is one that I've seen in the world of small business as well. And small businesses don't have auditors in the warehouse, right? So it's even easier for a small business person to do this. And I've seen it usually the other way, where the inventory on paper will be quite small, but when you go to the warehouse, there's a lot more stuff. And usually it's because they're manipulating their inventory to reduce their profits and their tax bill for many years sometimes. Or sometimes it's just laziness, where if you see the same inventory level for several years in a row and you realize just nobody's ever gone and counted it, they're just plugging a number in that they've given their accountant for their tax return, and no one's ever called them on it. And so inventory counting or inventory manipulation is another place in the world of small business that people have to watch out for, because it can have a direct impact on what the profitability looks like. And so that's what these guys were doing. And I remember one of the stories from the book, they would actually get their inventory people to choose certain specific SKU items they knew the auditors weren't going to count, and they would bump them up and try to be as strategic as they could. They were really trying to outsmart those guys.
Oh yeah, I had no trouble outsmarting them, because these were not experienced people. They generally, the accounting firms sent their least experienced people out to the warehouses. I mean, really, because it's boring work. You got to sit there and sit there in a warehouse. Nobody wants to do that. So they did a really good job of just inflating their warehouses, because they wanted to continue to show the profit increase. In fact, Eddie would say, "Look, I want to increase I want my profits. I want my warehouses to be increased good 30% this year." And you call in the warehouse manager, and the warehouse manager didn't know. He didn't know that it directly related to the profits, because it's not generally known among ordinary people that that if you increase the value of stuff in the warehouse, that it increases corporate profits. That's an accounting thing. Most people don't know accounting, so they didn't know that.
Right. And so what was happening then on the share front when these things were being done? Because obviously it was being done to get the share price to go up. Eddie must have been selling off shares to pocket money from new investors or people that were trying to buy them.
Yeah, Eddie was a big. Well, he got a lot of shares. In the IPO. He was the biggest shareholder, and just as soon, the moment they went public, he immediately, he knew what was going on. He didn't want to hold on to this ridiculous garbage share. So he started selling. Every time he sold, he issued a press release saying, "I'm doing this to diversify my portfolio." I mean, I diversify his portfolio. I'm doing this to diversify my portfolio. You see, so I'm really, I love this company, but I got to put a swimming pool in. I want to buy, oil wells. Yeah, I want to diversify my. So he would do this time and again, and they would always issue a press release saying there are no plans at this time to sell future shares, but he would always sell future shares. Yeah. So he was constantly unloading shares, constantly. After a while, people started noticing, this guy's selling shares. This isn't a good thing.
Well, and I noticed that too, like some of his family members even were some of the sort of net losers from his stock manipulation, because he didn't seem to care if they suffered either.
Yeah, as head of the family, as head of the Antar family, this was an immigrant family, and it was people who escaped from Aleppo, Syria in the 1920s. It was an immigrant family, very close knit. One of the things you're supposed to do in that milieu is you're supposed to take care of the family. If you have a good business, it doesn't really matter whether it's legitimate or not legitimate. You have to take care of your brothers, their cousins. And he gave them jobs, but he didn't really cut them in too much on all this share stuff. And they started to resent what he was doing. There was a lot of fighting and squabbling within the family. I mean, he wasn't really sharing, sharing the wealth really. So there was a lot of displeasure among the family. Didn't help him at all.
And so, as things progressed, of course,
Mhm.
every year he's trying to show increases in sales or profitability. He's got to continuously meet or exceed this benchmark of growth. And
Right.
each year, as he creates a new fraud, he then has to compound them in some way to make
Right.
them even bigger to keep the game going.
Right.
And so I guess I think the last big one that I remember from my notes was invoice uh, mismatching, I guess we could call it, where he started to get really close to some of the suppliers, and he would say, "Look, we need you to deliver this order, but can you hold the invoice till April 1st or whatever?"
Yeah. Right.
And so this would be deferring some of the costs into the next accounting period, just another way to kind of kick the can down the road to um, snowball the whole thing.
Right. Well, toward the latter stages of the fraud, he engaged in several schemes to sort of to manipulate, to create the appearance of earnings that weren't there. One of the things that you mentioned earlier that he did, this was, I think, chronologically, I believe this came after the warehouse fraud. One of the things he did came to be known famously as the Panama Pump. He's sort of reversing the scam, taking
Right.
money from banks in Panama, cash at banks in Panama, taking them out. Actually, I think it might have been in the form of cashier's checks, but whatever. He would take cash from banks in Panama. The cash would be brought up to New York City, and then it would be deposited in the cash registers of in the accounts of individual stores. And this way, this would increase the amount of profits so that it would increase, and that would then have a multiplier, and it would improve the share price and increase the wealth of the family members who had shares, of course, which was principally Eddie. But that was, the Panama Pump, as it came to be known, that was, I think, the first big thing after the warehouse.
So where I've seen this in the world of small business, and it doesn't necessarily, a lot of the stuff that we're talking about today, we're talking about it in the context of Crazy Eddie's frauds, but I see this stuff in the world of small business, not necessarily because someone's trying to be fraudulent, but often because they are ignorant, or they don't have proper bookkeeping help, or they make mistakes. But one of the things that can sometimes happen is if a small business doesn't have very good bookkeeping systems, and there's some kind of cash crunch at some point during the year, maybe they're short of money, they have bills to pay, the owner might put in some of their own money. They might write a check for $10,000 and put it into the business. And if the bookkeeping isn't done correctly, instead of it showing up as a loan from the shareholder or as an equity contribution, somebody could mislabel it as a sale. And so when I'm talking with small business buyers who are doing initial due diligence on a business they might be buying, one of the things I often recommend is just look at the bank statements and just scan the deposits, because you're looking for any round numbers.
Mm-hmm.
5,000, 10,000, 25,000, because very rarely do a day's sales end up being $10,000 right? And that's
Yeah.
often an indicator, because when somebody puts money into their company, that's usually how they do it. They do it in some round figure. So this is another thing that you have to be very careful of, and then make sure that deposit, you have to find out what it was, and make sure it was accounted for properly.
Right. Yeah, absolutely. You have to
Yeah.
watch for these things, because this is, what Eddie was doing was not, he didn't create these schemes. They were variations on stuff that people had done before. He just did it all at once. That was the thing about Eddie. He engaged in insider trading, insurance fraud. We didn't get into insurance fraud. He engaged in all these types of frauds all at one time. It was a little like a supermarket. Like he had everything. He
Well,
had everything.
yeah. So yes, we did forget about the insurance fraud, but I,
That
I,
is
I,
good.
I thought that was some of the most colorful stuff in the book. Yeah, but why don't you tell one of the stories? There, I think there was one about flooding that I
Oh,
thought was pretty interesting.
yeah. Well, you have to understand how Eddie was. He was ethical in the sense that he would never actually set fire to his place, and he would never actually initiate a flood. But if there was a flood, there would be a roof leaking. He would exaggerate what actually happened in the flood. What he would do is he would, go down to the basement. He'd have his guys go out to the basement of a store which had some flooding, and he'd take out the hoses, and he'd, hose down merchandise, and they bring in merchandise from other stores, slow moving merchandise from other stores, and they put it down in the basement. They hose down that merchandise, and sometimes they would do this time and time again because the merchandise would be used in multiple floods.
Well, and this is what I found amazing, because of course the insurance company didn't want the wet televisions, and so the assumption is that when they make the insurance payout, that Eddie has to pay to haul all of this stuff to the dump. But he actually put some of it in storage, so he could do this again and again.
He didn't. He would actually he would always insure this merchandise for full retail price. So he'd get the full retail price of this garbage that he was hosing down, and then he would take the stuff that was hosed down and he'd truck it out to a warehouse for flood goods. He'd bring them back for another flood in the future. And he dealt with a crooked independent insurance adjuster who dealt with who was in on it, and he in turn would deal with the insurance company's adjusters. And this time again, this is a very serious fraud. And he was never caught. Ironically, another electronics retailer was caught doing this, Newmark and Lewis, which went out of business from well-known New York City store. They actually were caught for insurance fraud, but Eddie was never caught for insurance fraud. That's a serious crime.
So I guess the story or sort of the caution in the world of small business I'm going to pick from this is that because I've seen financial statements before where they will have an income line for proceeds from insurance, meaning they had some kind of claim that got paid. And so I guess you really have to investigate what was the claim. And, I think that the important part would be, was the claim insured for retail price or wholesale price? Because if they were insured for retail price, then the event would inflate the earnings of the business in that period. If they were just insured for wholesale costs and your cost and your insurance claim were the same number, it would wash out. But in this case, you would have an inflation of the earnings based upon that claim, right?
Oh, absolutely.
The insurance company would add to your volume of sales.
Absolutely.
Yeah. And then the last one was the invoice mismatching. Is that right?
Mm-hmm. Yeah, I would say that probably came to the end. I mean, it was invoice mismatching, like screwing around with the dates of the invoices. And another thing they did, they used to actually issue what were known as debit memos. They would claim that that some merchandise was it was that the manufacturer sent them lousy merchandise. There was some problem, so they would issue debit memos. And these debit memos were, which they would send, they were like invoices in effect to the manufacturers. You got to send us in $400,000 because this merchandise was lousy or whatever. And the manufacturer would say, this is stupid. We're not going to honor this. But every time they issued a debit memo, it went right to the bottom line as additional profits.
They were recording it right away, even though the manufacturer hadn't responded or anything yet.
And the manufacturers they knew they were ridiculous. Nevertheless, they recorded them immediately as profits.
Yeah. And so eventually this house of cards kind of collapsed. Yeah. And, I got to tell you that I listened to the audio book, and the narrator who did the book I wouldn't say he read the book. I would say he performed the book because it was fantastic.
Right. The man, he was one of the greats. And he died of cancer about a couple of months after he did it. It was one of his last books. Great guy. Fabulous audible.
Yeah, that's unfortunate. Well, I really enjoyed it. I thought his voice was dead on, and it was very entertaining to listen to. A bunch more people have put some comments in here. Mark says there seems to always be a story behind the fraud that makes sense to the fraudster. Yeah, of course, right. They find themselves justified, right? And we have Linwood says, top of the morning, gentlemen. Linwood from Colorado. Hey, good to have you here as well, Linwood. Uh, this is awesome. So when did the book first come out? When was the publication date?
Well, the initial book, the hardcover book, came out in August 2022. Paperback edition, a cut rate bargain, crazy bargain. Paperback edition came out last August, and it's slightly revised. I added some stuff, so that's a better version. I recommend getting the paperback edition.
Well, I was going to ask, since it was released, and since there was renewed media attention on the whole story, have any new revelations come out from anyone connected to the story?
Well, I got an email. And this is just a little tangential point. One of the little things that happened to Eddie is he once got stabbed, at a fight at a nightclub. And I heard from the doctor who treated him. This was it was kind of interesting. It wasn't that significant from the standpoint of the book generally, but he just said he thought it was very unusual that nobody called the police. This man was hanging, his life was hanging by a thread. He was seriously injured, and there were no policemen there to interrogate what happened. It's always been a little mysterious exactly why he was stabbed at a nightclub in somewhere in Manhattan.
So I mean, would you say, you talk about all these things that happened to this guy and how, there were no police at the stabbing incident. He never got caught for the insurance fraud. How big a role do you think luck had in him being able to pull this thing off to the magnitude he achieved?
Oh, big time. Big time. Luck is always the factor in success, whether it's in the criminal or the legitimate world, as you know, and as I think a lot of people know. And I would say luck, however, turned against him due to his own stupidity. He mismanaged. They were caught because they did something very stupid. All these sales, cut the share price. People started to really begin to down. They couldn't sustain the fraud after a while, and he sold stock that people didn't like that. They stopped carrying out the fraud because they just ran out of things to do. They just gave up on the fraud. At a certain point, the stock price plummeted. So what happened? They were taken over. They had no choice. They were a public company. They were taken over, and that's what destroyed the fraud. And that was due to poor luck on their part, and that was also mismanagement. But I'd say, though, to address your point, though, on the way up, yeah, he had wonderful luck. He just happened to go into the he happened to declare for an IPO at a time when it was a serious IPO market. So luck was a big thing at his part.
Mm-hmm. Yeah, there was an appetite for new stocks. People were interested in this new stuff. And from the investor community point of view, a lot of these people were probably in the region, so they probably saw his television ads all the time. They were probably very familiar with the name, and he had an excitement and an energy around him in the business. It was probably something that people were excited to be a part of, because it was kind of like new and fresh and different, and it was all about new technology. And it kind of reminds me of like all that crypto stuff that you kind of see online nowadays.
Electronic retailers with the crypto of the 1980s. They were the hot stock back then.
Yeah.
That's where everybody was. That's where all the money was going.
Yeah. And so for anyone who's tuning in who wants to go check it out, it's Retail Gangster, the insane real life story of Crazy Eddy. And it is in my Amazon bookstore at dcbbooklist.com. And you can find it on Amazon stores around the world. Gary, I want to give you a big thank you for coming and talking with us today.
My pleasure. I appreciate it.
Well, we've got one final question from someone who I think maybe is just maybe discovering this genre. Just wants to know if you can recommend any other great business fraud books that might be out there.
Oh, that's an excellent question. I can only my mind goes blank except for the books that I've written myself. For some reason, I have this sort of mental block, out there. I can't think offhand of any books that are worth buying some. No, I mean, I don't know. There are a million good books out there. There's actually, I will say there is a book. To be fair, the best book on Madoff, the best was Madoff Talks by James Campbell. Great book. Best book on Madoff.
And that another giant, for those who don't know, a big Ponzi scheme, an affinity scam / Ponzi scheme, because Madoff targeted a particular community of people as well to try to gain confidence and I mean, he had a resume which actually was confidence inspiring. I mean, it really surprised me when that whole story came about, because he was a very successful person in a legitimate way. To come out and do this was a surprise, I think, to a lot of people.
He was the Crazy Eddy of Wall Street, you might say, except that he didn't advertise. That's really a wonderful Ponzi scheme. And the thing that's great about Campbell's book is that, he got access to everybody of importance, every single person of importance. That's the thing. And also Madoff talked to him forever. So it's really the definitive book on Madoff.
Well, I'm going to add it to my summer list. And I'm going to stay tuned to Gary, because he told me earlier that he's got a new book he's working on. Can't tell us what it is, but I know it's going to be interesting. And so with that, Gary, thanks so much for joining us today.
Well, thank you very much for having me. It was fun.
Yeah. All right. We'll see you shortly. And for everyone, please hit the like button. Don't forget to subscribe. And if you thought it was an interesting episode, leave your comments, share it with a friend. That's how podcasts like this one grow. And until next time, we'll talk to you soon. So, how can you learn more about buying, selling, financing, and managing small and medium-sized businesses? Easy. Go over to my blog site, davidcbarnett.com, where you can learn more about me and how I work with my clients. You can learn more about my books and courses that I've prepared for you. You can find out how to subscribe to my email list, the YouTube playlists, and more. There's literally hundreds of hours of content there, all for free, and I'd love for you to be my guest. Special thanks go to Mark Willis at Lake Growth Financial, today's video sponsor. Mark helps people better manage their personal and business finances through the Bank on Yourself insurance strategy. This is something I've done personally, and I've seen others use it successfully for years. Go to newbankingsolution.com to find all the interviews I've done with Mark and learn more about the advantages of these programs. While there, sign up for a free consultation to learn what this solution might look like for you.